in terms of like insight, I would maybe call it maybe a kind of experience. I think one aspect of reflection, let's call it reflection, is about control. It's about control, and it's very relevant. Like when you think about minority investments rather than control deals, and there's a little bit of background there, right? Historically, there's a little bit of protocol or some kind of consensus among the sovereign wealth funds talking about not to get into control or something, right? So you have seen CIC as well as a bunch of other sovereign funds, probably also the family office too, right? Sometimes they will get into minority deals, but it was fairly big stakes, and they will call this significant shareholders, right? The idea is significant minority. The idea is just be a financial investor, but not to mess with operation too much, but try to be a helpful investor. For example, in the China context, helping the foreign company to gain market access to China, right? Get more value out of the investment. No, it's definitely an interesting construct. Definitely interesting construct. But like when you, in terms of corporate governance, it creates certain challenges, right? Because if you think about because these are typically minority investment into private companies, right? Like PE deals. So if you think about private equity guys, they do not have liquidity. They invest in private company, but they have control, right? They can change the whole management team. They decide the future of the company, so on and so forth. And then on the hedge fund side, they typically do small percentage investments, but they mostly invest in public market stocks. So they don't have liquidity, but they don't have control, but they have liquidity, right? So if you are doing a supposedly meaningful, significant minority in a private company, you don't have control and you don't have liquidity, right? So you have to deal with that.